Welcome to the weekly meeting, July 8th, 2023. Team, we have arrived. We have gotten to the spot in the market that I have been waiting for a long time. Bebé. Buenos dias, bebé. So we got to the place in the market that hopefully everybody has been anticipating with the start of the 6-month candle. We had talked previously about some moves that we expected based off of this 6-month candle. And since now we're starting to see the moves being made in the market, I kind of wanted to take some time to readdress this and kind of show real time what we can expect or what we should be looking at as far as traders. So if we look at this candle and we measure the move of this candle, I'm gonna measure it from over here, but I'm just measuring from wick to wick. This candle is about a 2,000. This is a 2,000 pip candle. So if it pulls back, to the golden zone, we can expect about 1,000 pip move. That's just to the 50% mark. 1,000 pips is significant no matter how we're trading this. But just for everybody to better understand, how I view this, and not that my way is the only way to view it, but when I think of a candle starting, if the candle is going to be a bearish candle, I expect the first move to be in the opposite direction. This is the same thing that the ICT preaches about market direction. You want some manipulation before the actual move. And if we look at this 6-month candle, I'm going to spread it out so my words aren't jumbled up. On this 6-month candle, the previous high of this candle from the previous 6 months and the candle from 6 months ago, right? January 2022 and January 2023, those highs are relative equal highs. That provides a great liquidity point. And it's a lot of stop orders or liquidity that rest above these relative equal highs. So we can reasonably expect that when this candle opens up, we want to push higher, take out this liquidity, then make the move to the downside. So no, it doesn't matter if this is just a move to the golden zone, or maybe even a move to make a bearish order block for the market to start pushing south. Either way it goes, we have 1,000 pips at our disposal. That's the thought process behind the move. Now, all we have to do as traders is be patient enough to wait. So I want to drop down to the daily chart, so we can kind of talk about what happened. So going into the month, this is June 30th, this is July. So maybe some people on July 1st, once we took the liquidity from this daily candle, maybe you jumped in for the sell trade, maybe you were fooled, right? And then the market goes against you, taking out everybody. It pushes up higher. If you were a big picture thinker, you probably would have expected for the higher time frame liquidity to be taken, because this is going to be 1,000 pip move. So once you saw Friday this push up and take out those highs, now your mindset should have shifted to say, hey man, like, here's our opportunity as traders to short this market. And I saw this happen real time. I saw it first with this wick, then it comes down and it pushes higher. And I understood that this next candle, right? Started in New York. I figured that this was going to be a bearish move and it would start to sell off, right? I'm not worried, per se about this trade, but I figured that this move down would leave the daily wick. And I shot a screenshot into the chat to let everybody know that this this GA pair is ready to start its way down. Okay. Now, we don't expect this to be like a quick one candle move or whatever. I don't know how long it will take. We don't control the time aspect of trading. We just control the destination, right? We know where we can sell this market to. And if you look at this, it needs to take out, maybe one swing low at a time or two, maybe if they're close. But once you take out these swing lows, you always expect a retracement. Okay. That's how, if I'm trading this, that's how I would choose to trade. I didn't take this trade yesterday, but the UJ trade, I was all over that trade. And let's look at UJ. Okay, so going back to this 2-month chart, I had published a trade idea way back in the end of December. The end of December 20, I guess 6 months ago, I published a trade idea where I felt that price, let's just go look at it. It's not often that we get to brag on ourselves. So anyway, I published this trade idea for UJ to sell, right? Now, for whatever reason, lack of experience, my inability to have foresight, I didn't trade this. I didn't put a buy order in on January 15th, right? I did trade in spurts. I made some great money for this trade as it pushed up, but the new trader that I am I would have bought this, right? This pushed down, January 15th, it started buying up. All I had to do was put a buy in and just long-term trade this, like just hold that buy and add to it as the market pulled back. This thing went right to my TP. This blue line was where I thought that the trade needed to come. It went right there, turned right around and started pushing down. I did get into this short. I got into this short. Hell, I'll show you when I got into the short. I got into this UJ short on this candle right here, right? So it really didn't make me any money until Thursday, and then Friday it really made me some money. So if you want to go back and you want to look on this 4-hour candle, this was the high. You can see we broke through here. If you would have entered, you'd have went in drawdown. Then the price kind of levels out and it pushes you down in profit. You're basically break even, you're in profit, you're back to break even. Then the market drops you in deep profit, pulls back, right? And this pullback right here is basically a 78% or 80% pullback from this high. And then it falls off a cliff. Okay. If you keep in mind that this move, you're breaking there's swing lows through here. You're breaking these swing lows, you're breaking this swing low. And now you've broken this low. I expect for a pullback, right? The pullback, if it comes to the 78, is right here. There's an order block here. There's imbalance below there. So it could come to the 61 or it can push up to the 78. Either way is fine. I will buy this pair up to sell it back down. And once it gets to this point, I'm going to double my lot size of this buy up. And then I'll have two positions, and I'll at least hold these two positions the entire journey down. And then every time we have a pullback on the 4-hour time frame, I'll just buy the pullback. That's how I plan on trading this. And then we'll see. At some point, we'll have a pullback on the daily, and then we'll have a pullback on the weekly, the same way we have pullbacks on those lower time frames. And I'll have to make a decision on if I'm going to close some positions that are close to that pullback, but these two positions I will never have to close on the way down. They should never go into the drawdown, my top two positions. Do you guys understand, I guess, that concept?
I do. We talked about it yesterday. I just got a question.
Yes, sir.
So are you going to do this like on a prop or a regular?
Prop.
And I don't know. I guess you can. It just seems crazy. They ain't gonna have no rules against you like holding that long. So that was my only.
Listen, there are zero rules. You can hold through the weekend. Now you're not going to get paid unless you close out, right? Which is fine. Once you hold it for 30 days, you can close out at any point, right? Or maybe you have several accounts and you'll get paid in an account. You just want to hold this one. There's nothing that goes against any prop firm rule, other than when it pulls back, you can't go and draw down that 5%. That's why the more positions you get, the more you have to pay attention to the pullbacks. Does that make sense?
Perfect sense.
And if you're adding when you're supposed to add, then you're not going to draw down 5%. The key when you trade this style of trading is you add once it pulls back. Then this next impulse move is going to put you deep in profit. So if it pulls back, you're not going to go 5% in drawdown. You'll lose some equity, but you won't go 5% drawdown. Now, we still have to pay attention to the 5 o'clock rule too. Your drawdown is going to be based on equity, right? And not balance in most accounts. Some accounts will base your drawdown in balance. So if you have a prop firm that will base your drawdown on your balance, I mean, that's gold, But I think that people just need to kind of get into the trade, and then you can better understand how it's going to work out, right? This initial push, this basically, in 2 days, it was like a 23K payout, or 23K profit. So it's not rocket science. It's just how it works, And even though my entry was on the 30th, right, on this initial push down, I was in profit. Then I was basically break even. It never drew me down. Profit, break even, profit, break even, profit, break even, and then all of a sudden there was a significant push on Thursday, right? And then Friday we got that huge push. So for me, I looked at it as a long-term deal anyway. Like I think on Thursday, the highest it got was like $8,000. $8,000, maybe this initial push was $8,000 or $9,000, but I saw it at $8,000. And then it pulled back, it went from $8,000 to pretty much break even. And then it pushed again, and they were just all profit. So our mindset has to be one of like we have to understand what we're trying to accomplish with this trade. And if we don't understand it, it's easy to close out. Like it's very simple. I could have easily said, oh man, it's 20,000, close, right? And it would be a great day. But we've waited for this opportunity to trade these moves, and these are huge moves. So the best way to approach these trades is with the mindset that you have a long-term goal, right? Treat it like your job. Maybe you cash out every 2 weeks, maybe you cash out every month. But the opportunity that we're getting right now, we won't see this opportunity again for 6 months. It won't exist. Right now, we caught the market at the very top, right? If you look at this and you understand this scenario, the market was up here. We got the initial impulse move. It broke this swing low. This impulse move broke this swing low. The market retraced 80%, 78.6 on the dot. Now you're going to get a new impulse move. So if you think about this is how the market moves on every time frame. I know this is an extremely large time frame that we're talking about, which is 2 months. Every candle is 2 months. But this happens on the 5-minute time frame the same way this happens on the 2-month. When you get in the order block, as a trader, we expect for price to come and tap in. It never tapped in. It pushed away from the order block first. Then it came back to tap into the order block. All that we had to do as traders was drop down, and in this case, we dropped down to the 4-hour time frame to find the imbalance that the initial drop caused. And this was the initial drop that left that huge imbalance. So because we found this imbalance, all I did was draw a line from here over, right? Draw a line from that imbalance over. And that's where I expected price to come back and tap into, right? And that was the 50% of that imbalance. It tapped right in and it's pushing down. So now that the price pushes down and breaks these swing lows, right? This swing low in particular, because it pushed down and broke that swing low, that is chalk, change of character on the 4-hour time frame. Once you get a change of character, you wait for a retracement, right? The retracement should fill any imbalances, right? And we see the imbalance in this candle. Or it goes back to the order block that sponsored this break, right? Which the order block is here at the 78. The imbalance is at the 61.8. So I can buy it at least to the 61.8 before I worry about it turning around and selling down. This is how the market moves. This is what I am anticipating. This is what I'm trading. I only need to trade one pair. And as long as I trade this properly, the payout for me trading this one pair it can be ridiculous, because all I need to do is keep adding to. Every time I get a pullback on this 4-hour, I'll add to it, and we can just ride the wave as this pair trends back to the bottom, right? Whether you want to trade UJ or if you do the same thing that I'm discussing right now with UJ, you do the same thing with GA. GA is going to go down 1,000 pips. You can do it with GJ, you can do it with EJ, you can do it with NJ, on one of my accounts, I do have an NJ short, but I'm only actively trading one account. The rest is just a passive, you put the trade in, you let it run, you don't have to worry about it, because it's once it goes into profit, you're in profit. The only time that you may have to look at it is if you get a day that it's going to pull back, because you don't want it to pull back and cost you a 5% move. But if you effectively manage your trade, right, you can go and you can either trail your stop, or you can put a hedge in, at 4% or at 3%, so it doesn't take you out the trade. However you want to approach it as a trader, you will have the ability to make those decisions. And the beautiful thing about this is this doesn't require you to be on charts every day. It doesn't require any major maintenance. You could simply put the trade in and you can let it roll. You know, if you walk into the trade and you don't use the max 1%, maybe you use 0.25%, maybe you use 0.5%, then you'll probably never draw down 5%. You guys have any questions?
Good morning, Todd. I have a quick question. What about the news? I'm just asking.
Let's talk about the news. So again, this is I'm glad you asked that, Barbara, because that's a question that a lot of people get. But I want to come back, and I'm going to keep doing this. I'm going to pull up this trade idea. Sweet baby Jesus. If it comes up, it's not allowing me to re-pull it. Okay, I'm gonna keep going to this trade idea because I want to show you. I want everybody to be able to understand this. So you see this trade idea. What the heck is going on?
How do we see those trade ideas? I've been trying to find it.
So these are the ideas that I post. Like I publish this. You know, basically, if you have an idea, like if you're doing this, you can hit publish, and you can publish it to TradingView, and TradingView will hold your idea. Other people can see it, but TradingView will hold it. And when you click this play button, this will play out. It'll show you how your idea plays out. But
what's your TradingView name, Todd?
To someone. So if you look at this, Barbara, can you see that? You see my screen?
Yeah. Yes.
It says December 31st.
Yes.
So if you notice this, I mean, you can't go in here and fake anything or fix anything. It was several news events since December 31st. Price came right to the line, and now it's pushing away. We had NFP, right? We had the housing data that came out prior to NFP that was pro-dollar, and then NFP was anti-dollar. So, I say all that to say this: news is going to happen, but news is going to push the market the direction that the charts are already pointing in.
Okay.
You understand what I'm saying?
Yes. Yes.
If you have a 4-hour order block that's bearish, the worst thing that can happen when that news hits is it can go up there and wick the high and take liquidity from that order block, but its price is still going down. So as long as that's why it's important as traders that we get our execution correct. And here's what I mean. Do you remember on Thursday when the news came out?
Yeah, I do.
There was a jobs report on Thursday, and they added something like 400,000 jobs, and they had projected to add, I want to say 200,000 jobs. Let's just go back and look at it, because this is a very important topic. Okay, so if I go to my favorites and find Forex Factory, now I want to go to Thursday. Okay, Thursday is July 6th. So on this red folder, y'all see this?
Yes.
The employment change, 500K almost. We had projected 200K. 220K. We added double. It was double the number.
Right.
Estimated change in employed people during the previous month. The actual is greater than forecast is good for currency, right?
Right.
So let's go back and look at the chart. Remember, I was in this trade over here, right?
Yes.
I was in profit. I was break even. I was in profit. I'm break even. I'm break even. I'm deep in profit. Deep. This is Thursday on London session. I'm in big money profit. My lot size is like a 15. So you know, I'm gonna show you. I'm 118 pips to the good. So at least $1,500, right? I'm at
Right.
least 1,500 to the good. The news comes out and it goes against me. It takes me all the way back to break even. That news. Now it didn't break anything. It just took you to break even. Then NFP comes out, right?
Right.
The next day NFP comes out and boom, it just breaks through. So you can't, you have to trade the chart. If you're a person that always gets out of your position because of news, it's going to be hard for you to be a trader, right? I mean, you can be a scalper. And I'm not saying scalpers can't make money, but we have to understand, you know, and brings me back to that video that we watched, or that I watched. This video, I would suggest that everybody go. As a matter of fact, I'm gonna drop this video in the chat because it's that important, in my opinion. This guy is a successful trader, but he drops some very good gems when it comes to being a trader. He took several courses, like, you know, people sell their courses online.
Yes.
But he also took a professional course from like SBM Capital, you know, a place that employs and trains professional traders. And he said it was their outlook and the way that they do things that really created the breakthrough for him. And here's what I mean by that. The approach to the market is totally different from a retail person's approach. Like, you're talking to me about news events. They don't discuss news events, right? They trade fundamentals the same way we trade fundamentals. We understand what the jobs report is. We understand raising interest rates. We understand that the Fed has stopped raising interest rates. They paused last month, right? They're not going to raise interest rates this month, even though there's a meeting on the 22nd, right? But as a trader, you take all this information in and you make an informed decision on whether you're going to short the market or not. We're shorting the US dollar, and we're shorting the US dollar based off of the fundamentals that have built up over the last several months. And the chart already told us, back in December that the US dollar was going to be getting shorted. So all we're doing is trading the chart along with the fundamentals. The fundamentals were already there that told us that the value of the dollar was going to go down. The dollar is still very highly valued. It's the highest valued currency. It's just that we're finished raising interest rates. Interest rates is what generates the value of your currency. Our economy is still the best economy out there. It's just the interest rates have stopped being raised, so the value of the dollar is going to drop. It's going to continually drop. The financial system runs in these cycles. It's the very reason why, if you look back at 2009, when they dropped the interest rates to zero, you go look at any index and it goes straight up. It's like you're going uphill, and it went uphill for 10 years. It's not because those companies were the greatest companies in the world. It's because money was free. So companies who who make money by borrowing money, if you can borrow money and you don't have to pay any interest on it, sheesh, of course you're going to make money. You know what I'm saying? Because they're going to charge us for their merchandise and for their services, but they're not paying any overhead. They're not paying anything for the money they borrow for those services, to make those services or those merchandise. So it's a natural relationship. The same way that there's a natural relationship for the value of the dollar to drop if the Fed stops raising interest rates. We raised interest rates 10 times in a row. That's never happened before in the history of economies. It's never happened before. That is why, if you look at the value of the dollar since the pandemic, right? If you look in January, y'all remember the people who were in this group in January of 2021, when we started raising interest rates, look where the dollar was. Look at this. This is remarkable. This is where the dollar was in January or in December of 2020, the year of the pandemic. This is where the dollar was. The minute that we raised interest rates in January. Look at the value of the dollar. Look. So naturally, when they say, hey, we're not raising interest rates, the dollar has to come back to earth. The dollar shot off the earth. It has to pull back. And if we go look at the indices, if we look at the indices chart and we look at January 2021, what do y'all think you're going to see? I mean, we've done this before, but what do you think you're going to see? Anybody? The opposite, maybe? December 2021, January. The indices go straight down because when you raise interest rates, that hurts companies. They have to pay for the money that they borrow. So they're going to do worse in that environment. So does that answer your question, Barbara?
Yes, it does. Thank you.
Yeah. So as long as you're entering the trade when you're supposed to enter the trade, the news should not hurt you. The only news events that are going to hurt us is when people fly airplanes into buildings, or we have countries that attack people. Those things are not programmed into many of the markets, right? Like that's real-time situations that happen that might crash, a certain currency. But generally speaking, there is some rhetoric that happens, like they will talk tough before they actually do the attack. So a lot of times the market will already start lining up to sell if they know that there's going to be an attack. Does that make sense?
Yes, it does. Thank you.
All right. All right. Does anybody else have any questions? Is everybody, do y'all know what you're trading?
Yep.
This AU long, Selena, you're going to hold your AU trade?
Yes, sir. I am holding my AU trade.
So for this really goes for everybody too. The dollar's dropping, right? So any of those trades that you AU, GU, EU, if the dollar's dropping, I don't want to insult anybody's intelligence. That means those other trades should be buying, right? So if I look at the 2-week chart for the dollar, now granted, this is not complete. We still got next week, but this is lining up great, right? For a drop, base, drop, right? Once you get this drop next week, we'll probably get a retracement, a pullback. And then I do expect for this to drop past. If you notice, I got this red line. It's not just a red
Bless
line.
you.
What's that?
My bad.
Oh, no, it's all, this red line is not just here for S and Gs. This red line is because there's liquidity. There's relative equal lows right here. So I expect on this drop that we'll either break the order block or maybe we'll get a bounce. But I think we'll break through this order block and we'll take out that liquidity. So I would really encourage you guys to mark your liquidity, on your chart. When I started listening to ICT, a couple of years ago, he used to always say, until you identify the liquidity, you will become the liquidity, and it really doesn't make a lot of sense because nobody before ICT ever preached liquidity. They preached other stuff like support and resistance, and they trend lines and even just order blocks. But the first thing that we have to identify when we open a chart, and it doesn't matter what time frame we're on, and I can go back to this GA chart. Even on this 6-month chart, I'll put everything in the trash. Okay, even on this 6-month chart right here, I had to identify the liquidity, right? And I know these don't line up the best, but this is relative equal highs. This high and this high, relative equal highs. If I expect this market to sell, it's easy to go up and wick these highs before you start pushing down. And that might provide that might fill up the gas tank for the initial move down. But when you drop down on the different time frames, right? If I drop down on the 2-month, the relative equal highs look even better. Let me get a wick. It probably fills an imbalance in this candle. We'll start pushing down. We expect price to push down to fill the imbalance in this candle. So as you drop down in your time frames, you start noticing different things. Like this high is equal to this high. These are equal highs. Before last month, they wicked that high, right? Price came up, wicked that high, came down, it came back up and it finished here. This price came up, pushed down a little bit, came up, wicked this high, and now we expect the sell move. So as you drop down in your time frames as a trader, you have to be able to identify what needs to happen. So when you see this gravestone doji on the weekly chart that's telling you, hey, we've exhausted our move up, we need to move down, you expected price to at least fill in the wick. But if you put your extra brain power to this, you're saying, hey man, the wick on this candle is relatively equal to this high. So they're probably both going to get taken out. Both of these highs will probably get taken out, and they get taken out by a wick, which tells us that the market is going to push to the opposite side. This is nothing more than a stop run on the weekly chart. You take out those buy stops, you grab that liquidity. Now you start running to the bottom side. Now, as novice or whatever, we'll look and say, man, this is a bullish order block. And I'll tell you, you're 1,000% correct. That is a bullish order block. And next week, you're going to see a red candle. Now you're going to say it's a bearish order block. But it's because we have the higher time frames that we can lean on that let us know that this market should push down, right? And we can expect the sell move to start happening. And the lower the time frame you move to, you'll start seeing the way that the candles are going to play out to start telling you, hey man, it's time to get bearish. On this 12-hour, you got a gravestone doji. On the 4-hour, you have the actual bearish order block, right? It closed over the first moving average. You're going to get a push up probably, and then you're going to get the first bearish candle that closes below the moving average, and we can look for the rapid push down, right? Once once you get this pushed down, you know, you want to see a break of structure and then a pullback, right? On the lower time frames, you already got a break of structure, and now you're going to get a pullback. So you're going to see the same things that start to line up on the, you know, on the 4 hour. Then it's going to push up to the daily, you know, I mean the 12 hour, the daily, you know, so on and so forth. It really helps when you have a good understanding of what you need to see, right? On the 4 hour, you get this high, it's equal to this high. The next thing you know, we run those highs and we start to push down.
Can we go to that the lower time frame and see the break of structure and all that?
Sure. Sure. Okay, so on this 15-minute chart, price pushes up. How do you know this price is gonna sell? You get this push down. That wick is a break of structure. It broke these lows. It pulls back, lets you in the trade for the short. If you drop down to the 5-minute, it's going to show you. Well, let's just drop down. 5-minute, you get the push down, broke these structure, pull back to let you in the trade. Price trickles, but it still breaks this low, pulls back. It doesn't pull back high, but if you look, there's imbalance left right here, right? So let's just say you didn't want to get in right here. That's perfectly fine. You could wait. This area is more than likely the area that this trade is going to push back to before it sells. This is your imbalance that sparked, you know, on this impulse move down that we broke these lows. This swing low is broken. This swing low was broken. Eventually, this swing low was broken. Now price has to push back up to this imbalance before it pushes down. If you look at this on the 4 hour chart, there is your imbalance this in that 4 hour candle. Does that make sense?
Yes, it does. Thank you.
So
Would that be a 78 retracement or?
probably. I didn't put the fib on it.
Okay.
So yeah, it's right above the 78.
Okay. Thank you.
Which makes perfect sense. So this is just about us identifying, you know, really what needs to happen, right? Like once you start seeing this sort of thing, you start having a greater appreciation for what you need to go look for, right? Like on the lower time frame. So if you're expecting price to start becoming bearish, you can be a type of person that doesn't want to trade until it breaks the moving average. Perfectly fine. But even after you break the moving average, you have to understand that there will be a pullback, right? Because this right here will be the first swing low that gets broken. So even when we break this moving average, you're probably going to get a pullback first. Then it's going to push down and we're going to break these lows. Then you're going to get another pullback, so on and so forth. So as long as price is moving in your direction, your targets need to be the swing lows on this side of the chart. And as price pushes down to those swing lows and you start seeing reactions, you know, I'm not going to say it's going to pull back after every swing low break, but you can watch it, you know, and what I like to do is I like to see where we are at the close of a 4 hour candle, right? Sometimes you get a wick and the 4 hour candle runs back up. That happens. But other times, you know, you'll get these moves and they'll come, the 4 hour candle will come to a close. The next candle will open up and it'll go down and the wick, the low of the swing low, and then you'll get your retracement. Also, a lot of times your retracement moves will happen around the kill zones of whatever time frame, whether it's London, Asian, or New York. So if you understand the kill zone times, you can also kind of tailor your trading to be around those time frames if you're even going to trade it. Once you're in the trade selling, you're in profit. But if you want to be a person that scalps along the way or adds positions along the way, then you need to kind of time it up to with those kill zone, because you're going to get more bang for your buck. Does that make sense?
Yes, it does. I have to remember to scale back and go to those lower time frames and not wait for that 4 hour, I think.
Yeah, it's just a matter of time. Like once you start seeing this and you see it over and over, you're going to stop waiting for a break, because you're going to realize, man, like a lot of times this 4 hour break happens so far after the fact. You could have been, 100 pips in profit by the time this break happens. And I'm not discouraging people from waiting. I want to encourage people to understand what it is you're looking for, I always try to combat the news argument, which is why it's great to have published these ideas, because not all my ideas pan out, but a lot of times, when you look at the ideas, from the higher time frames, you're going to get, I guess, better results. And whenever your ideas work out, you're able to go back and you're able to draw on that. Like, how did I pinpoint this? And then it'll be based on good logic. Like, so AU, me and Selena were in this AU trade, right? Now, if you notice, AU turned way over here. I didn't expect AU to push way back down, to these lows before it pushed back up. Didn't expect it at all. But what happened was, this is that Thursday news that went against the dollar, the same way that the Thursday news went against my UJ trade. But I didn't hold this AU trade because I was holding the UJ trade. I didn't hold the AU trade. I had a stop loss and it was in profit for when this AU pushed down. Now, once the NFP news came out and this pushed back down past the or into the 20s, I got 2 positions on the way up for this AU trade, because I've been bullish on AU, on GU, and on EU. My GU trade is it just went positive Friday. And y'all know I've been in that trade for a while. I was in a hedge, in that trade for a while. So it's just a matter of holding what you got. A lot of times, as traders, we're risk averse and we don't like to see red. But at the end of the day, it's just drawdown, man. And if you manage the drawdown, if you could have managed through this drawdown, and as a matter of fact, this wasn't even this, you didn't have to even hold it. Let's just say you had got out over here, but as soon as you see the trade turn around and it broke this high, as soon as you saw that push up that broke this high, you should have been looking down here for a pullback. It gave you a pullback, then it comes around and it breaks this high, tells you again, hey, I'm going to go up. Now, this is on Tuesday before the dollar got the bad news that pushed it down on Thursday. But by it breaking structure to the upside, told you it was going to go up. And if that wasn't enough, this wick down on Thursday and it closing up here, bro, you could have entered the trade right there. Before the NFP news. Now, I wouldn't have done it. I wouldn't have entered a trade like this before NFP. I was in the trade way over here, hedged it, cut my hedge after this pullback, and just wrote it out. But I wouldn't have gotten into the trade, before NFP if I wasn't already in the trade. But because because I understand market structure, and by this time you had a inverted head and shoulders, and you kind of already understood the logic behind this. But this was where, originally I wanted to TP at these highs, right? Relative equal highs right here. And I just took the TP out because I understand the long range state of the dollar, right? So I'm going to get all this. I'm just going to let it run. And I know it's not going to go straight up. Yeah, it's going to be pullbacks, but like, why would I give up a position that I got into here, to get out here when I know the price is going to end up way up here somewhere? And if you think about this, for the people who have traded with me for a while, you always hear me say that, hey, anytime you add a position on the pullback, anywhere along that pullback is a good add once price passes it. Because the fact is, you had people probably long on the dollar. They were long on the dollar. The dollar went up. It pulled back. They might have got their entry here, but even if they got another entry here, once price got up here, this was a good entry because it was along the pullback. So now that any one of us who joined this trade, who bought the dollar around 127, now that the dollar is at 128, we had great entries. We 100 pips in the profit right now. By the end of next week, it's gonna be a real good entry, because if you think about this, all we're doing is rally, base, rally, base, rally. And whether you look at AU, EU, GU, it's all the same. So this, anywhere along this pullback is going to end up being a great entry for this move. Anywhere along this pullback is a great entry for this up move. And next week, I expect, the dollar to keep losing ground, and I expect for these pair to go ahead and start pushing up. I don't know what news events. I know we're going to have CPI and all that other stuff. I don't have those results. Those news events will happen, but I'm still going to be long in my AU. I'm still going to be long in my GU. I'm not even going to watch those. Okay, I don't care about those news events. Now if something happens to where where the trade goes against me, I that's cool. My hedge is what it is. It is where it is. I'm not concerned about that. I think the dollar is going down, and it's going down because we're done raising interest rates. Anybody have any questions?
I have another question.
Sure.
Sorry, OG, but on the GA trade, is that a sell for 6 months?
All
Or
right. That's that's a good question. I don't want to talk about time. We don't control time. It's a sell based on the retracement of the 6-month candle. But
Okay.
let's not mistake ourselves and say this trade is going to take 6 months. That's just not the case. None of us can tell you how long this trade is going to take. We don't know. All we can tell you is that based on this 6-month candle, right? Every trader would expect a pullback.
Right.
Right? Because this candle was 2,000 pips, we expected the pullback to the 50%, which is 1,000 pip pullback.
Okay.
I don't. It might take 2 weeks to go 1,000 pips. I don't know. I know on the GN trade, we've seen it run 700 pips in a week, right? So we don't know. I don't know how long it'll take. I just know that this candle took 6 months to finish, and this is what it gave us. If you go back, look, some of these candles are super huge and super long,
Right.
but I was talking to my brother this morning, and in general, it takes longer for a candle to go up than it does for it to drop. So I don't know how long it will take for us to see the finish line, but I think the more important piece is just for us to execute the move as far as it going down, breaking the swing low, it pulling back up, it going down, breaking another swing low, and it pulling back up. And
Okay.
whenever I was asked before, I think Alicia was asking me, I don't trade 6-month candles. We don't have to trade the candle. We're trading a pullback based on the length of this candle. And we can go down to the 2-week chart, right? It's a bullish order block. We expect it to push down into the bullish order block, right? So we're selling it to buy it if it turns and buys. Now I'm biased for it to keep selling, right?
Right.
But I'm just trading. I'm trading what I see, and I have a bias. But I'm not going to trade what I think and ignore what's happening on the chart. Does that make sense?
Yes. Yes.
And the fact that this bought first instead of selling tells me everything I need to know. And hopefully, by the time that this is over, it'll tell y'all everything y'all need to know too. I think in most cases, the candle goes in the opposite direction that it's going to end up going. It starts in the opposite direction. Any other questions? What are y'all trading?
Well, I'm still gonna trade AU next week and see if I can get additional positions. I haven't looked at one of the USD weekly order box to see which one of those that I could get a nice retracement on. So that's what I'm doing next week.
So you're not going to trade the JPYs?
Oh yeah, and I forgot about the retracement on the JP.
Listen, hey, we can't trade everything, guys. So,
Okay.
what I think is, we're going to have to decide as individuals what our low hanging fruit looks like, right? Because at the end of the day, we have to make it make sense, financially for us.
Right.
Can you go back to GJ on the weekly? Oh, I'm sorry. I'm sorry. Go ahead.
Yeah, that's fine. If it doesn't make sense financially for us, then it's probably not a great situation. But for me, I want a trade that's going to be low hanging fruit. I want to be able to take advantage of whatever opportunity that the market is giving me. Whatever opportunity the market is giving me as a trader. So whatever your low hanging fruit looks like, whatever pair that is, whether it's gold, because gold got some great opportunities too. Great opportunities. And the thing is, if you throw a fib on this move from here to here, which, well, it's already on it, that's the fib is already on this move from here to here. It pulled back basically to 61. And now it's turning and pushing up. Great moves were given out, on gold. And I was talking to somebody, I don't even remember who it was, but gold had pushed down. How do you know it's going up, Todd? Well, if you look at this move to push up and we break this high right here, the minute we break this high, gold told us that we're going up. Then it pulls back and gives us a seat at the table, right? That's basically a 78% retracement right here. Gives us a seat at the table.
The upper room.
Yeah. Like you, at some point, we won't even have to say it no more. At some point. Now, when you look at this chart, you have a bullish order block on the daily. You have relative equal highs. I mean, I don't know if y'all can see it, but relative equal highs right here at the top, at the 50% mark of this pullback, relative equal highs. So I expect price to push down, grab liquidity from down here, push up to take out this liquidity. And you're going to see the same sort of thing as gold pushes up. And you'll look at these swing highs over here. As you take out the swing highs, you get retracement as gold pushes up. But if you look at this, there's a shoulder, there's a head, there's another shoulder, inverted head and shoulders, if you want to look at it like that, right? It's just all kinds of opportunity. And, if you want to say that gold is pushing down, if you look at this down move, we broke these swing lows over here, right? We broke all these swing lows. This swing low is still intact. So if you have a move that pushes down and breaks all these swing lows, you can throw a fib from here to get the retracement back up. And oh, by the way, there's a huge imbalance right here. So just me looking at the chart, I can expect to trade gold from where it is now all the way up here to the 2000s. As the dollar gets weaker, gold is going to get stronger. So I'm just trading the chart, I'm just trading the chart. And maybe gold just pulls back a little bit and then pushes down further. That's cool. I have to wait to see, but there are massive moves that are going to be made on gold, especially as the dollar loses value.
Todd.
Oh my God. Yes, ma'am.
Hi, hello. So it's Denise. Sorry, you've mentioned a couple of times that the importance of relative equal highs. Can you just give me 2 minutes, just explain what the significance of that, please?
Sure, let's talk about it. So now I'm a ICT student, right? And now even more and more, if you look at any smart money videos or smart money traders, they're always going to point out the most important things on your chart is liquidity, right? So if I point out an area that has relative equal highs, right, or relative equal lows, if you think about this concept, when you first learn how to trade, you traded something called support and resistance, right?
Yeah.
Most of us did. So if I draw a line through here, it's easy for me to argue that this is support, right? Because price is bouncing off this level of support, then it breaks through the support and it turns into resistance. Price is rejected. All right. So when you have an area of equal highs, right? This is a level of resistance. And if you have an area of relative equal lows, this is going to be an area of support. Now on this daily chart, it just looks like 2 wicks. But if I drop down to the 4-hour chart, right, you're going to have an area, but right now it's just two equal wicks. But the further you drop down, you're going to see an area of the market that has been touched.
Right. Okay.
Which is going to end up being your level of support. And because you have these areas of support and resistance, this is where retail traders are going to put stop losses to go short. So the market is going to come up in wick or going to take out those positions. The market is always going to go to the liquidity. So if you're in a long trade and you're expecting the market to go higher, you can target those areas as your take profit areas. You don't have to get out before it gets to those areas. You know it's going to go and take the liquidity. And the same way that, if you think about this, if you're a short-term trader, like if you're trading on this level, right? follow my cursor right here. This high right here was Friday, June 3rd, right? At 1,1300. So this high right here was the high of the New York session. You agree with that?
Yep.
So if you look down here, you have the lows are getting higher. You expect price to push up.
Mhm.
But before price pushes up on London session, price pushes down. It takes out these lows first. Then it goes up and takes out the high and creates a new high. When it comes and creates this new high, if you look back over here, these are relative equal highs, right?
Mhm.
Now this wick past those highs. So it took the liquidity. Now the market is going to move back down. Before we go back and take these highs, the market is going to go down, right? And create equal lows down here. Then it goes and takes those highs. And the area that it just created is for equal lows. And if you go back and pay attention to what session we on and all that stuff, this will change the way you're trading. It's a lot thicker than I wanted the line, but
Right.
all right, dog it. Of course, it's not letting me do it. Let me just use a. Okay, so this is liquidity. If you look at the time, 1300, 1 o'clock. This is the London Open. London Open goes up and takes out the highs, then pushes back down in New York, right? This is the New York session. It took out the highs. New York session, it pushes back and takes the lows. But these were relative equal lows. It always comes and grabs the liquidity. It's nothing more. If you can identify the liquidity, you're going to get paid. Regardless of whether you think the market is going up. The market is going up, it's going to go take the downside liquidity first. If the market is going down, it's going to take the upside liquidity before it goes down. That's how it works.
Mm.
It's no different than you getting on the highway. Before you go anywhere on the highway, you're going to fill up. You're going to fill up your gas tank. Taking liquidity is this essentially the same thing as the market filling up its gas tank for whatever trip it's going to take. So if you look at this move right here, this down move, you already ran this liquidity. Come back up, you run it again. And if you put a fib from here to here, this pullback is going to be probably a 61.8, right? Before the market pushes down and takes out all that sell side liquidity. It comes down and it creates relative equal lows. Then the market shoots back up, takes out that temporary liquidity on that pullback. It takes that liquidity, makes relative equal highs. So you got relative equal highs, you got relative equal lows. If you think that this market is a bullish market, then what you're going to do is you're going to fib from swing low to swing high. You want to see your pullback, right? Look at all these lows right here. I would expect to see this market come back, probably wick these lows to go higher to take out these relative equal highs. Just based on, the 15-minute chart. So relative equal lows is all I'm saying is this is an area of support. Because relatively all those lows are hitting the same spot. This creates people who are long right here, got in for a long, put their stop loss right here. Or if they're not using stop losses, they're using sell stops. So when the market comes down and goes right below there and it's going to trigger their sell stops, they're going to be in for a short, and then the market is going to go long. Those people are going to lose. Once you see the liquidity grab, then you get in for the buy. Once you see people lose money, that's when you should be looking for an entry.
That's funny as hell. Who does that?
Yeah,
Like,
that's how it is. I mean, once you start seeing it, you can't stop. And that's the reason that, you know, when I saw that liquidity grab on GA, that's why I said, hey, it's time to go short. Because you see the equal highs. You see this. I can't unsee this. This is equal highs. Liquidity grab. The market, as soon as it grabs liquidity, look how it turns and gets out of there, man. Look at the speed that drops. Below that. There's absolutely no reason to go up here if you're going to speed back down. The only reason that happened like that is to take these guys out. I mean, just think, this is a 2-year level. This is 2020, this is June 23. If I go over, there's another one in 2022. Like, this is a 15-minute chart, but let's just go to the weekly. The weekly chart, you can see that this level, this is May 2023. This is 2022. This is January 2022. So both of these price points, January 2022, May 2023, last week, 2023. These are relative equal highs. So there's no reason to shoot up there to take those highs out if price is just going to come back down. That's a surefire sign that the market is about to push south, right? If you see this, if you can ever get your mind, and you will, right? Like, I didn't become a seer of this stuff until here recently, right? But I have listened to the concepts for at least, a year and change, year and a half at this point. Once you start seeing it for what it is, now I trust. It's not that I'm seeing it. I already trust. I don't have to wait to see this break a moving average or anything. Once I see that pull and it goes down, I already know what time it is. I know we're about to sell. And I don't even have to wait for this market to break this swing low. I don't have to wait for the market to come down and break any lows. I already know because I've seen it so many times. I trust what I see. And for many people, they say, well, Todd, we didn't break this swing low. And I'd be like, no, we didn't. We broke this swing low. This swing low is gone. We'll get a pullback. Then we'll come back and we'll break these relative equal lows, right? So the market doesn't just break a swing low. It set the next move up by creating equal lows. Now, when it comes back down, it's going to break these relative equal lows. So there are a group of people out there that feel like, man, we got to push up, we got to pull back, we got to push up higher, we're going longer. There are a group of people out here that feel like we're going long. They never even took into consideration the higher time frames.
Right.
And they got long right here. They got long, they happy. As long as they get out right here, they good. If they don't, that market gonna get out of there quick, and it's gonna come right back down and swoop. It's gonna take out these relative equal lows. So that's what I mean when I say relative equal lows. The further you drop down, you're gonna see a level of support. And when I say relative equal highs, it's just gonna be a level of resistance. We're all speaking the same language. If you learn retail methods, then you're going to say support and resistance. If you learn smart money, you're going to say relative equal highs, relative equal lows, or whatever it may be. But the fact of the matter is the market is just taking out liquidity. If you can identify it, I guarantee you're going to make a lot of money. Because once you see this and you know that you're expecting a sell, you could have put a sell stop anywhere up here. You don't have to have a huge lot size because maybe you don't trust it or you don't know how many pips up is going to go. Something ICT used to say was, he used to do, I think he said a 30 pip. Let me just test this because I think this is more than 30 pips. Damn near 30 pips. So 38 pips. So if you had a position up here with a 40 pip stop loss, it'd have been perfect. But I don't need to hug the stop loss. My intention, if I was just going to put a sell limit trade above these highs, I wouldn't care that it goes into drawdown, because I have faith that this is going to happen based on these higher time frames telling me that we need to pull back. Every one of these candles have wicks that pull back. So this will be no different. You know, this 6-month candle will have a wick on it. And that's what I'm basing my idea off of, right? And I didn't just open up and sell the candle because the new month started. I understand that we got to go up first and then push down, because the move is going to be a down move. That's why we're going up first. But you know, those types of things may take you a little bit longer to internalize before you can start actually capitalizing on what you're seeing.
It's that power of three that ICT runs his yap about.
It's exactly that power of three. And once you start seeing it, at first you're probably not going to trust what you see. And then, as you start seeing it over and over, the same way that this group kind of is starting to understand that we just got to, once we get an impulse move, we got to go and look for the retracement and the imbalance that it's going to pull back to. But once you start seeing it for what it is, then you'll start being able to take advantage of it, right? So whenever I look at this chart, what I see is an impulse move that took out this high. This was a swing high. This impulse move took the swing high out, right? I would expect a pullback to fulfill the imbalance for us to go higher. Where's the imbalance? I see imbalance here. I see imbalance here, right? So at some point, the market has to pull way back down here to address these imbalances. But before we address any of these imbalances, we've got to address these imbalances. Then we got to take out this swing low. Then we got to take out these lows right here, relative equal lows. We got to take out this swing low. We got to address these imbalances. So one thing at a time. As a trader, I'm short, right? And the easy way for me to do this is to throw a fib. Really, I would throw it from these lows to this high, and I would find my 78. And then I'll just trade the market back down. And if you look at this, it's from this swing high to this swing low is 776 pips. Now, we just fibbed the 6-month candle, and all of this is inclusive in the 6-month candle. So the move that I expect would be about 1,000 pip drop. If I just fib from this wick to this wick, 1,000 pip pullback, it's going to come to about these moving averages, right? Maybe in between the moving average before it goes up. Yeah. Any questions?
Thank you for that. I will have to deliberate and quantitate and digest.
Yeah, and here's the thing, man. I would just encourage everybody, like, create a demo. You don't have to trade this live if you don't trust it. You won't ever see, or I'm not going to say you won't ever see. So we won't see this happen for another 6 months, right? We only get the close of this candle every 6 months. And I'm not going to tell you that I knew, like 6 months ago, that I knew that I would be anticipating these moves. But what I will tell you is that I had an idea that you could trade better, more accurately by using a higher time frame, which is what pushed me to use this 2-month chart. I didn't know that it was going to take 6 months for price to push back into this area, right? But everything that is going on in the real world supports the fact that the dollar needs to lose, it needs to lose value. And the fact that everything lines up as far as when we started raising interest rates, and you can see the dollar shoot straight up when we started raising interest rate, and the fact that we stopped raising interest rate, we paused raising interest rates. Of course, we expect to see the dollar start coming back down to earth. We got a meteoric rise. We have to come back to earth, even if we just come back and close this imbalance on the 2-month chart. Like, we all understand that there's an imbalance that needs to be closed at the 116 mark. We're at 143, guys. We got to go $30. We got to drop $30, which is about 30,000 pips, probably somewhere around there, or maybe it's 3,000 pips. But the point is, there's a lot of opportunity available to us if we just trust what the chart is telling us. And had I had the same mental acumen about trading back then as I do now, I would have traded this up the entire way. This would have been a 6-month directional bias. Well, and I did have that, but I used to tell people, oh, it got to go up here. But it's something about seeing it play out. Now there will never be a question. This must happen. And now when this sells, I know we have to break these lows. We broke this swing low. We created a new swing low and it pushed up. I know I can sell this at least to equal lows. At least. That's how smart money is. Because we have the order block and it pushed down, price came back and tapped us in, we can sell it to equal lows. No question. So we're good. We have a blessing for a sell down of 700 pips or something like that.
Hey, remember a couple of weeks ago when me and OG was talking about crypto needing to, Bitcoin halving next year and crypto needing to go up? We was talking about that narrative out there about those BRIC countries, trying to create their own currency to weaken the dollar. Remember we had that conversation?
Yeah, I do.
The reason I bring it up is because all of that stuff, in my opinion, is fundamental manipulation, because the dollar has to come down. So they create these narratives and put these stories and these kinds of things out there because the dollar needs to come down. And if you look at these charts, like you were saying, it's gone up. It has to retrace. Price action tells us it has to retrace. But to help it retrace, these narratives are created. And that's why I was saying back then too that, everybody's debt is in dollars. The dollar, it may go somewhere at some point, but it's not going anywhere anytime soon. It just needs to retrace. So if you think about, what's going on in some of the narratives, it all kind of makes sense from a larger macro point of view. But it needs to come down, and it's not coming down because the BRIC nations are creating a currency, as an example. It has to come down because price action tells us, it has to come down. So that's all I wanted to say.
I agree.
It's
I'm sorry, go ahead, OG.
It's pre-planned. Everything is pre-planned, and you got to know what you're reading. And we have people here that are very qualified to have these discussions, and people need to hear it. If they're not one of those people, right, they'll become one of those people. because we're going to keep talking about it. And you need to just know what to pay attention to and eliminate the noise. Once the noise is eliminated, we know exactly what to pay attention to with CPI, with FOMC, with NFP. It adds up, right? It has to pull back. It's not maybe it's going to pull back. It has to pull back. That's healthy price action. The market moves with integrity. To beat the market, you got to become the market. And you got to know these things. You got to be 12 steps ahead of it. We are 12 steps ahead of it. Some people haven't been here long enough to believe that yet, but stick around because we're on to something very special here, something that no one can take away from it. So dial in.
And I just wanted to add, you know, like if you look at this measurement, this says we have to drop 1,500 pips just to equal lows. Now, I believe we're going lower than that. You know, the same way, if you would have asked me in 2020, if Bitcoin would drop down to 20,000, back down to $20,000 after it got to 60, I would have told you, no, ain't no way. Even though the Fib said it would. You know what I'm saying?
Yeah.
It's hard for us to digest those numbers and those ranges. Like man, it can't drop that much. It can't drop $30,000. Oh, it dropped $30,000. It's the same thing is going to happen now. And the difference is we see it now. We're aware of it. We can actually trade it now. Versus before, we didn't see it. And now we understand the fundamentals behind it as well. You know, like if somebody tells you, or if you look at a chart, you can probably tell somebody when we raise interest rates and when we drop them based on the US 30 chart or the NASDAQ chart. The only time the NASDAQ chart is going to go up for months at a time is when the interest rate is nothing. And then as soon as we raise interest rates, the very month that we raise interest rates, you get the drop. So just armed with that knowledge, we can make unlimited capital for the rest of our lives, because every time that the US says, hey, we're going to raise interest rates, we know, hey, sell the indices. Every time they drop them, hey, buy the indices. You know, like for me, even when I was in Iraq, and you know, we used to have these conversations, you know, we used to say, oh man, you know, we only go to war because people get rich. That's the truth, but it didn't make real sense to me, you know, because without an understanding of how people got rich, I mean, this is exactly how people get rich. If we could go back to when Russia attacked Ukraine, if we were armed with the proper knowledge, bruh, GN, GA, any of those Euro pairs, all of them tanked for months. We could have been in there with lot sizes that we didn't have no business in there with, you know. And I'm not suggesting we should over leverage, but the point is, it was a one-way market for months. But because that was the first war that I traded, I didn't have the acumen to trade it the proper way, you know, like I didn't, or the faith that it was going to keep dropping. And that's the difference between me then and me now, sitting on top of this USD JPY trade. Bruh, like I'm sitting on this trade, like with the full weight and the full confidence that we're going to get all 1,526 pips. And then some probably, but we're guaranteed these pips. And it's not based, I mean, it's based on everything that I was learning and I've watched play out on smaller time frames with the same candle structures, right? When we go down to those smaller time frames and we get a bearish order block, or we get, you know, a bullish order block, it always trades to the base of that order block. Unless there's a news event that cause it to go a different way. In this case, on the higher time frame, and you know, everybody's always talking about the higher time frames. we can understand that even if we're going up, we got to pull back to these moving averages, right? Even if we're in an up move, price has every other situation. We're going down, price comes back to the moving average. We're going up, price comes back to the moving average. Well, we went up. We went to exhaustion. Price is coming back to the moving average. It's going to happen. So it's people in here. It's 26 people in this chat. And half of y'all don't believe price is coming back to the moving average because now you have the opportunity to participate in this sale to the moving average. But you don't believe that it's going to happen. I'm one of the ones that's already in the trade. And I'm one of the ones that that already knows it's going to happen. I've been waiting for it to happen. So it's fine. It doesn't matter what group you're in. But the important thing is I'm screaming from the top of the mountain because I've seen this before and because I've anticipated this. Now I want you to see it. You know, if this is your first time seeing it, this is your first time seeing it, but it's available to you, right? This same trade for you, right? It's available for you to take this trade. You don't have to believe me. But I'm showing you that this trade, this trade is happening now. Like this is the first week of the trade right here. This is not the 1,500 pips. This is this is the first. This is the beginning. This is the beginning of the carnage, right? If you look at this chart, this is the beginning. We haven't even made a dent yet, right? If you look at the 4-hour chart, you know we haven't made a dent in the trade yet. I got in the trade around this area. It went sideways. That's basically 2 days of a move. So it doesn't matter what camp you're in. I'm going to show you. You will become a true believer, like Dr. Jones. Like you're going to see it. And it's just based on, we're not trading the 6-month candle. We're trading and we're using those candles as guides. Here.
Having the years under your belt, right? They say it takes 2 to 5 years to become profitable. In a lot of ways, yeah, that's true. And it's getting an abundance of candles under your belt. That's like me playing golf. It takes thousands upon thousands of hitting golf ball after golf ball after golf ball. Practice makes perfect. You're forward testing, right? A lot of people talk about back testing. And just like Todd says about forward testing, what is happening on this 6-month candle? Before we even knew about the 6-month candle, we hadn't had a forward test. Now we've had a full 6-month candle, understanding that we're paying attention to a 6-month candle, and we forward tested that 6-month candle. Now, because it's going to get to the point where there's nothing in the market you haven't seen. We've seen the 70 to 75% pullback from the all-time highs on Bitcoin. That's the first time we saw that. Have we seen a black swan event yet? No. That's 80%. That's the 80% pullback. That would be a black swan. That's what I want to see. I want to see a black swan event in my trading career. 1, to say that I've seen it, and 2, to actually trade it. Because if we do get that, you're going to get a fire sale on everything that you can think of. So you want it to go low. It doesn't have to go low, but if it does, we know what to do if it does. So, and that's another forward test, right? We back test. Yeah, what about the forward test? Get into something. It's a rabbit hole. You got to go to as far as deep as that rabbit hole can be, dig it up, figure it out, put it back together and sit it there and compartmentalize it so that if you see that again, you know exactly what to do when it happens. So this is a great, like I said, 6-month candle, fire, went up first, right? And now the pullback, right? It's what it does, right? You have to believe that. You have to get into a forward testing mentality to start adding this stuff to your arsenal. And once you have it, and you're not by yourself. You got people here that have already dug these things up. We just need you to believe it. And once you believe it, you come to this side. And then we got to get everybody else to understand it and believe it, right? And then you can take advantage of it. Soon, everyone in here is going to be catching these moves. We did the play-by-play 2 weeks ago. I did it with gold. I did a little bit of Ethereum. I did GU a little bit. Now we do EU. And then I pull back and I let people start paying attention. Well, does anybody see a sell on GU? Do you see an order block? You shouldn't have to ask anybody what they see. Everybody sees the same thing. Are you paying attention to the right thing? Because if you see the order block, everybody sees the order block. Catch the order block. It could be a bearish order block, catch the pullback. It could be a bullish order block, catch the pullback. Both sides of the spectrum. Doesn't matter what your bias is. What does the candle tell you? Because if it's at a position for you to enter, you need to enter. And don't do nothing crazy, just catch the move. So when people are like, oh, well, he said it was no, see, we're navigating. If that thing turns and goes the other way, you know that we're going the other way. We know how to mitigate loss and get on the right track. You got to be able to let go of a specific bias and go with the bias that is taking shape. If you don't know how to do that, you're shotgunning. And this ain't a shotgun event. You got to take the proper position. Let it come to you. Both sides of the spectrum, right? You can catch a buy just like you can catch a sell at the right position. Because if it's wrong, you got to have a tight stop. If it's right, you're going to still have a tight stop and you're going to have the move correct. People don't believe that. And you're going to have to believe it, because if you don't believe it, you're going to continually miss moves and you're going to be at square one for 2 to 5 years, where we can come in and streamline your learning curve and help you see what you're supposed to see. And then we'll know that you got it, because you're no longer going to be asking people for what they see. You're going to put out what you see. And that's important. That's how we know you're getting it. Alicia, on fire. Like we got some people that are still asking, almost like you're asking for signals. You're not even trying to see the block. You're not even trying to see the tap in. I can tell by what you're saying. And everybody has their level, right? We got to get you through that, because there should be no questions, really. The 78 is a 78. You need to know how to find a 78. And once you see it, everybody sees it. We're catching it. We don't have to come on and be like, oh, look at it's at the 78. No, we're in our bunkers and we're into the moves. Like sometimes, like I was on fire over the week with the moves. But I don't have to do that. I'm doing that. It's entertaining. But I'm not going to hold myself accountable for having to constantly run through every single candle. This is what I'm doing for myself. So when I do expose it and I start walking people through, they like it, but they still are paralyzed. And we got to get you out of from being paralyzed. I'm just showing you how to walk through the trade. When the momentum is picking up, when momentum dies, things like that, you got to know how to navigate that. So when I do that, it's fun, right? Just showing you how you should be looking at it. It's a job. So if you want to be the best employee for yourself, you got to be able to put your best foot forward and give yourself quality positions. Don't chase nothing. It's supposed to do what it's supposed to do. So all you got to do is wait for it to show you exactly what you're looking for. That's all you need, and you'll get there.
And the thing about it, most of these moves we've talked about for months or weeks prior to them happening. We've all talked about UJ, NJ. You know, I talked about NJ ad nauseum. I talked about the 6-month candle for probably a month before it expired. You know, and I've even had people ask me, hey man, you got a video on the 6-month candle? And I'm like, no, because we're not trading the candle. We just have an understanding that it needs to retrace. So we're using that candle as a guide. We're still trading the weekly order block or the 2 week or however you want to trade. We haven't switched any concept. We're just using a larger time zone to guide our trades. So, here's what I mean by that. Starting this past week, every day that I come to the market, I only have to look for a sell on UJ. I don't have to buy it at all. Now, I am going to buy it back up because that's just how I trade. But if you're a person who doesn't believe that, or you're not there, you just want to look for UJ sales, that's cool. Now, for the next however long it takes for price to go down these 1,500 pips, you have a 1,500 pip runway to look for sales on this particular pair. To me, that's power in itself. For GA is going to drop 1,000 pips. You got 1,000 pip runway to look for sales. Maybe that's where you need to start. But it just takes time. Once you understand the concept, now you just need the chart time to identify the things that you need to see in order for you to be able to take advantage of a trade. That's basically all there is to it.
A question. Do you have, this might be a silly questions. It's just things that's popping into my mind because I've only just joined the group. But do you have have you kind of evaluated the group in a sense of where the group is going, where you're trying to take people to, and from that, I'm just joining the groups and I'm thinking, where do I go to ask questions? Is it just because, I may not always feel comfortable asking stupid questions in this
I don't
26 people forum, but I'm just thinking.
I don't believe you can ask a stupid question in this forum. I think that this is where we have to ask our questions. If you think that it's a stupid question, I guarantee you out of this 27 people in this room,
other people have the questions too.
Right. At least 10 other people have the same question as you have. Maybe they're tired of asking questions. Maybe they feel like, they don't like my tone. And listen, I spent 20 years in the Army. I'm naturally a loud person. I'm never trying to belittle anybody. I have a relationship with Selena and we go back and forth. She knows me. So please, hopefully you guys aren't taking what I say personally. I joke a lot and all that good stuff. But I'm not trying to talk down at anybody, and I'm not trying to belittle anybody or undermine your knowledge level, because believe it or not, we all started in the same spot where we didn't understand Jack. And unfortunately for most of us, we didn't have an environment that was conducive to us learning what we needed to learn, especially if we were paying somebody. We were paying them. It was against their interest to actually school us. They would tell us just enough to keep us paying. Whereas now, with the environment we're in now, the goal is to take you from novice to somebody who understands why the market is moving that direction, what direction is moving, and how you can take advantage of it. The end goal for us is for me to be able to post a trade idea or take a pair. Maybe I'm just trading UJ, and you don't necessarily have to look at it because I'm posting these trade ideas, and you can glance at the idea and be like, yeah, I agree. I see how we broke that swing low. It needs to retrace, and that's my new entry. That's the idea. Like if OG posts a trade idea, I don't have to go and wonder whether or not it's a good idea. I can look at the chart and be like, well, yeah, let me get my entry here, right? You can do a 5-minute analysis or sometimes less than that. You can see where that's a good trade idea. So the idea is for us to have a group to where we can take advantage of every move that the market makes. I don't trade NZD USD. Maybe you do. So I don't have to look at that. You know, we have people who trade the indices and they're very good. So I don't necessarily need to watch the indice every day for a move. Maybe they're analyzing and they're posting trade ideas. And if I happen to look at one, maybe it fits, you know, I'm not trading, or my trade, the pair that I'm looking at doesn't have a trade set up. So I'm looking to get into a trade today, and you post a trade idea that's good. That's the vision that the group has. So I think to get all of us to recognize and view the market in a similar manner is the end goal. What do you have? What question?
Okay, so I'm just kind of like, I'm your energy is not disrespectful or nothing like that. You know, you're very clear, but I'm just hearing a lot of terminologies that is new, and you know, it can feel a little bit frustrating because I'm thinking, damn, I've been kind of trying to learn this for about, it's like 6 months. And obviously, I'm eager to learn. I'm eager to get in there. And, you know, you're talking about opportunities, which I'd like to capitalize on. But of course, I'm restrained because I don't understand all of what you're saying. So I'm thinking, where can I go to kind of perhaps slow it down? Because I don't want to ask questions when, you know, perhaps there are people who've been there 2 years and know all of this stuff. And of course, we're all different learners. There's a lot to take in. You know, when someone's just speaking and sort of, you know, just putting the knowledge out there. So my question is, okay, so is there a kind of, okay, you've just joined a group, so perhaps you should be here. You know, you should be here. And when you finish here, you can go to here. You know, because
what I always try to suggest to people, you know, if you want to understand what I'm talking about, you're probably going to need to look at some ICT,
yeah,
right? Smart money concept videos.
yeah.
I always suggest that people look at the Market Maker series. It's a 5-video series that he put out. There's also a WENT series, WENT, What Every New Trader Needs series. It's a 5-video series.
Mm-hmm.
And then to me, the icing on the cake was the 2022 mentorship. And you don't necessarily have to look at every one of those videos. ICT has several concepts, right? I only trade a few of the concepts. I don't trade every ICT concept. I trade a few concepts. My whole trading philosophy with the weekly charts and the weekly candles is based on the power of 3 concept. In the power of 3, you know, basically says that price is going to open up. It's going to either go through accumulation or distribution. Whether, you know, if you believe the price is going higher, it's going to accumulate first,
Mm-hmm.
which means that it's going to manipulate the lows, right? It's going to go down and take liquidity from the lows, then it's going to go higher.
Yeah.
If you have a bias for the market to go lower, it's going to open up, go higher first, and manipulate the highs before it actually goes lower. That's the power of 3 concept, basically. Obviously, there's more to it, right? Like when you get the expansion move after it accumulates or after it distributes, you know, this is a distribution, right? Price goes up, it keeps going higher, right? It keeps going higher, taking you out the trade. Then all of a sudden it pushes down. This is the expansion
Mm-hmm.
after the distribution. So once you get this expansion, the market needs to trade back to the imbalance. Do you know what an imbalance is?
Yes. Because I've looked at ICT, so I understand fair value, which is the balance.
Yeah.
I understand the fibs. I understand support and resistance, which, you know, it's a different terminology. So I've really just been looking at like the day chart and then trying to work my way down to like 15.5. And just looking for, I haven't really started trading. I've just been on the demo, but I'm just looking for I'm always just looking for the market to pull back to the fair value gaps.
Right.
So I kind of, look for the order blocks and validate those by the fair value gaps. And so it's kind of very, very simple, and I want it to be simple, but I'm thinking, I think with other things like knowing now about the like I didn't understand the thing about liquidity, that it's always going for, so that's like, okay, right. So, just little things kind of will be adding to my arsenal so that, when I do start trading confidently. Do you know what happened to me? I was trading before and I didn't have a clue what I was doing. Somebody was just saying to me, buy, sell. And I made about 100K and I lost it all. And that was during the war because I was trading oil. And I just didn't know what the hell was going on, but I was just making tons of money.
Right.
I didn't understand, I was doing really just because the war was happening. But then it was a bit of a scam, and they were trying to get my money. And because I was making all that money, I got stuck in it, and I didn't know how to get out, and just lost all my money.
Well,
But
I didn't discover them because I'd have never learned.
and it just gave me that fire to come back in and try to really learn. So it's so funny that I'm so hesitant to trade now, when before I was just in there with no hesitation. I was in the market for like 6, 7, 8 months in a trade, in masses of drawdown, and I wasn't even fazed by it because I just felt so confident, that I was down, I was up, I was down, I was just making lots of money. But now it's so funny that just to make one trade, I'm so reluctant.
Right. Well, I think that you're doing the right thing by being in demo, because there really is no rush. Most of us lost a lot of money, trading. Like I lost a lot of money before I actually learned what to do. And to me, there should be no rush in you actually putting skin in the game. Like, wait until you can actually see the setup, like even now, just me looking at this chart, and I see the order block here, I see the balance here, I see the push down. Even this on this 4-hour chart, when I look over here, there is a low right here with the wick of this candle, right? You see that low? And we went right below the low of this candle. So on some level, on the 15-minute chart, you're going to have the push up, you're going to have a swing low right here on the 15-minute chart. And this swing low is taken out by this move right here. So now price needs to retrace to this imbalance before it pushes further down. So if you can identify that, now there's other elements to it. Like I can look on the chart. That's how I know it needs to go down 1,500 more pips. But even if you didn't know that and you were just trading on these lower levels, you can use the information from these lower levels to take shorter term trades. Right? All I'm doing, I'm using these super high time frames in order to see a path to trade a certain direction for an extended period of time. That's it.
Yes.
It's no different than you looking at the daily and the 5 and 15-minute for entry. I'm doing the same thing. Instead of using the daily, I'm using a 6-month.
Right.
Right. And I'm using a 4-hour time frame to enter. Now I still have the ability to enter on a 15-minute, but the point is I'm just looking for a longer time period trade. That's it. I'm doing the same thing that you're doing by looking at the daily and the 15-minute and all that, but I'm just doing it from a higher time frame. Does that make sense?
Perfect sense. Yeah.
So if you need a one-on-one, we can do one-on-ones at your discretion. OG would probably do the same thing. There are several people who have knowledge that would eagerly, give you what they know, which is not a problem. But you have to reach out and say, hey man, I need a one-on-one, and these are the days I'm free or whatever, and y'all can just hop on.
Well, that's a question I'm asking because I didn't,
Yeah, at any point, if you need a one-on-one, I would be happy to get with you on a one-on-one. It's not a big deal. you just need to have like a series of questions, or, what you don't understand, or, you say you don't know how to pick your own trade setups at this point. Some of the things that I would encourage you to do is, you have to decide what type of trader you want to be. And what I mean by that is, maybe you're a scalper, maybe you're a day trader, maybe
No,
you're
no. I don't have the patience to sit and what I want to be able to find my setup and leave it, because I just don't have
a
the
swing trader.
concentration. I'm a really going to be an intraday or a long-term trader. No, I'm not a scalper. Definitely
Okay.
not.
Which it makes perfect sense. At the end of the day, it's all the same thing. It's just, it depends on what time frame you find the setup on.
Yeah.
Because the 1 second chart breaks structure the same way that a 15-minute chart, same way a 4-hour chart, so on and so forth. So it depends on what time frame you find your setup. But we're doing the exact same thing.
Mm-hmm.
So you just let us know when you're free.
Okay.
And we can work and set up a one-on-one. And you know how to use the DM. You can DM on the Discord.
Discord.
Yeah.
I will find out.
So all you do is click on somebody's name, like my name or OG
Okay.
name, and just send us a message.
Oh, okay, sure.
And that goes for anybody. If anybody feels like they need help or they're lost, don't be the one sitting in the dark. Especially when you have people that will help you for free. I mean, that's what we do. We're just trying to get everybody on the same sheet of music.
And that's the old narrative. I'm pretty sure every single person that's come into this game has ran into some type of predatory situation with the person that's supposed to be teaching you something. And that's what we're trying to break. People are so used to that thing that happened there that you think that everyone is doing that. And this is the difference. You want to see change, you have to become the change. It doesn't mean that everything else is going to change. We're just going to have to be the change and let it ride out. Like the lane that is developing for us to go down is wide open. Nobody else wants to do this. I've been told over and over back then that you can't do this for free. And you're pushing your fear onto me. You're projecting a fear that it can't be done for free. I mean, even my mom and my dad, why are you doing this for free? Because
I can't make a
I
phone call.
know what the other thing looks like. I know what it means for someone to come in and take the last bit of capital that you have. You're supposed to be using that capital to make capital. I'm not supposed to be taking your capital. I'm supposed to be standing on what I do as a professional and being that professional and giving back to the community that gave to me. Even before anybody knew who I was or anything like that, it's the forex style community, because there's a lot of different kind of trading from what I've heard over time, these different ways of trading. I still don't even know how to put it into words what these people consider trading to be. That's not trading. This is trading. So it took time to figure that out. And I'm not going to have no one pay me to learn free information. It's free. Now, paying for my time, maybe. I pay for my time. So if I got to have those conversations with myself and call it what it is. If I'm already paying myself, I don't need you to pay me. There's another check in the right box, right? You're not only just learning information in this group, you're learning how a group is supposed to be, and you're a part of that group. So this is family, right? People don't believe that. We still got a lot of people in here that are not active because they suffered from being in the wrong community. We should have 700 active right now, but because people got hurt financially, mentally, I thought it was going to be this and it was something else, the same old thing. I'm gonna walk away, but they're in the right group now and they don't know that. So we got to keep building it, keep building it, keep building it. The fact that you're active is there's so many people that aren't. So don't think for 1 second that you got so many questions. I've answered 1,000 questions on top of 1,000 questions, and I'm gonna answer 1,000 more on top of 1,000 more because it's necessary. We got to be in position to do what's necessary, right? And get profitable because your voice needs to be heard. Somebody can only hear it from you. So we got to get you there so that you don't block that blessing. And we'll get everybody out of blocking blessings and starting to become the blessing and start paying it forward. There are millions of people that would, once they understand that what's happening here, they're going to beg to come here because this is what it's supposed to look like. We can actually become what IML claims to be. We can be that times 1,000 and really be getting people to the next level. And we can build on that. If the money will come later, because it's going to come. We will be charging eventually, but it's not going to be like thousands of dollars and all this type of stuff. No, it's going to be a self-sustaining machine where the money that is going out and the money that's being paid is just a recycle because we have value and that value will accumulate dollars because we're doing it the right way. So there's no rush on that. We just keep building and becoming what we want to become. And then we can figure out all the details later. But we get everybody to profitability, nobody's going to be tripping about money. That's the best position to be in, especially if you're trying to build an establishment. Everybody's paid. So now it's just going to be money on top of money. That's my soapbox.
I'll just add this, in reference to that 6-month candle. Most people don't know how to trade longer time frames, don't believe in it, whatever. Open a demo, put the trade in, and walk away. Let the time play out and see. That can be your ultimate proof. Open your demo today, put the trade in. I remember back in 2020, I didn't trade pairs, and it was because they moved too slow. And we looked at some longer time frames, and we had missed some 78% pullbacks, et cetera, et cetera. And now is the right time to put the trade in. Come back in 3 months, 4 months, whatever, 2 months. Look at it monthly, whatever your time hack is. Monitor the trade, but put it in a demo and don't bother it. And see what happens.
I have a question about you, Jay. So since it's made its downtrend, is it too late to get into it, or should I wait for a pullback?
You gotta wait for a pullback, but we're nowhere close to being. This is the chart. We just started pushing down.
Right.
This pair, has to come down about 1,500 more pips. So you have plenty of time to catch the move. But if you understand anything about trading, right? If you go to this daily chart, you see this daily candle, this long daily candle?
Yes.
If you fib this candle, it needs to pull back to the 50%. But the best thing for you to do is to fib the weekly candle, right? Because the week is over. If you fib from wick to wick, weekly candle, this pullback needs to be 50%, right? If you're good at looking at imbalance, you can look on this 4-hour chart or the 15-minute chart, and you can find out where your imbalance is on the higher time frame. So you know what an imbalance is?
Yes, I do.
So when you go up here, you can see there's an imbalance here. There's an order block here. The price needs to come up. It's going to pass this level. And to me, the target is probably right around here. This is probably where it's going to come, right? this is the area. If I'm just naked eye looking at this chart, this is going to be the pullback. And if I fib from here to here, it's probably pretty close to your 78%. I got to move this over. And you know why you should wait to get in?
No, I don't.
So have you ever heard of the terminology buy low, sell high?
Yes.
So this is the low right here. So you can't, I mean, you can sell low, but you should buy low. And when it pushes it back up here to your 78, then you sell. This is the high that you want to sell. You need to wait for price to get to a discounted level before you get in for the sale. And the discounted level is this first yellow line. So anytime you get in for the sale after price goes up past this yellow line, it's going to eventually be a good trade. And I know some people are probably confused by that, but it's just the truth. You know, once price pushes back into the discounted level, we understand that price overall is going to move down. So even if you buy it here and it goes further into discount, eventually it's going to sell and you're going to be in profit. So right now we got the impulse move down. Now we need to wait for the pullback. And then once it closes the imbalance, it's probably going to come to this imbalance around the 78. Once the price gets here, you can get in for the sale and wait for the impulse move down. And here's the thing, guys. Once price gets to this level and you get your position number 2 for me, you know, if you're already in this trade, this will be position number 2. These 2 positions will likely never be in drawdown ever again as this trade pushes down, because we're at the very top of the move down. The further the move goes down, there's always a chance that on some higher level pullback that your position goes back in the drawdown. Does that make sense?
Yes. Yes, it does.
Okay,
Thank you so much.
no problem.
So what you're saying is you got a catbird position?
You know, I'm always trying to get that catbird seat.
Hey,
Catbird is the only position you want.
that's right.
But that is the exact reason for me why I talked about this so far in advance. You know, and for those of you, do y'all know what catbird is?
I was just gonna ask, what is catbird?
No,
Yeah, what is that?
never heard of it.
We laugh.
Oh, y'all tripping, man.
Yeah, it is funny. But catbird means you got the pole position, you got the best seat, right? You're sitting catbird, you know, you're sitting in the optimal position. You're at the top of the action. Y'all remember that GN trade that I caught in the Wicks?
Yep.
And this GA that I sent out, like, I don't know if anybody would have just hopped in the trade, which I hope you never do, but if anybody would have just hopped in that GA trade when I sent it out, you'd have caught this trade somewhere up here, right? Now, I expect for it to pull back, and if it pulls back into this imbalance, if you get in the sale, you're going to be sitting catbird, which means you're going to be at the very top as the action pushes down. It's like the best seat in the house. So, you know, if you hear us saying we sit in catbird, that means we got a great entry into the trade.
And it's so far out of the way. That's the beauty of it, right? Where does it stop? Where does it stop? It's we have so many candles under our belts that we have a good feel for the top of strike. I mean, it doesn't get any easier than buy low, sell high. Like, there's only one thing you can do. Like, before we got the red candle, it was bullish, but you can't put a buy in right there. You have to put a sell in right there. You just do. That's what price does. It likes to go back and recollect the orders that it just created in that whole. That's almost a completely bearish order block. It had a little bit further to go. It just totally destroyed the bullish candle. That's what you want to see. You're not going to get that all the time. But when you get that, I mean, that the definition of catbird, that's it in a nutshell right there. That's a fire entry.
And on the lower time frames, it's the exact thing that I was talking about when you had these highs. So if you were trading this time frame, hopefully you would have had these marked up. These highs, these relative equal highs right here should have been marked up. So when you see price take those highs and immediately push back down, you pull the trigger on a sell because you understand what just happened. And you're already anticipating that the move needs to sell. Elfie, why would you Elfie, why would you get out of catbird?
I didn't even know it was catbird.
So listen,
Now I know it's
but this is
catbird.
what I asked you. This is what I asked you, Elfie. Did you realize that both UJ, EJ,
I
and
did, and
You
I'm
realize
planning
it was
on getting
100%.
back in.
Yeah, but you
Elfie says she don't want that kind of money, man.
to me, you can't give those positions away. They're only going
I'm
to
realizing this now.
yeah, Elfie, it's only going to grow. Like it's only going to go from 5,000 to 15,000 to 30,000. You know, like it's just going to keep going. It's 1,500 pips. Imagine that.
Well, yes, I am hearing you, and I just told myself that I'm not gonna do that again. And I'm proud of myself that I actually got catbird for the very first time. So I'm working on staying in catbird and just
It
keeping
don't
catbird.
count if you got out, if you gave up the catbird.
Yeah, you
Now-
can't
Do
get
that, Elfie. Go ahead, Elfie.
Anyways, I
Look
got
at
it.
with the
I was
catbird,
talking about that on Wednesday's call. I think it was Wednesday's call or Thursday's call. When I wasn't even as sure, but
Yeah.
now in hindsight,
yeah, you
I
can't
hear
get up
at
there.
least you want to at least leave a 0.01. When you have a catbird position, do not close the whole trade. Take the majority of the trade and then move your stop loss right in front of your trade. Because you've done everything you wanted to do with that trade except for that last 0.01, 0.05, whatever it is you want to leave. You've collected all the profits in your mind. Usually you close the trade out completely. I challenge you to not close the trade out completely. Keep the position and put your stop loss in front of the trade and then walk away.
will do.
Away, close the screen, you know. It's a lot
Will do. But I like catbird.
Hey,
I don't know if you do, Elfie. I mean, it sounds like you don't.
Stop playing with me. I like catbird. That's my new goal. I mean, it's been my goal.
hey,
I think it was which one was it? The GN trade that Todd posted, what, 3 weeks ago or so?
yeah.
When you were talking about the 2
beginning of
week,
last
was
month.
it the 2 week or the 2 month candle where you
It
saw
was
it?
a 2-week candle. It was a 2-week
2 week candle,
that-
yes.
Yeah, that it ran the liquidity. And listen, that's why I post that type of stuff, because everybody needs to fall in love with the catbird. And the minute you realize that you're in the midst of a liquidity grab, first you have to identify it. You have to be able to identify your liquidity. And for me, it starts by having it identified on the higher time frames. You go put your lines on the higher time frame. And when you see that price crosses that line, then you should be looking for price to reverse quickly. It's going to do it quickly, the same way that the ICT or whatever educator you look at, the same way that they say. And for me, the thing that will always stick with me is on these published trade ideas. If y'all saw the way that UJ chart was set up with that blue line, how price went right to that line and then whoop, it came right back down. And if you saw on my chart of UJ, like if you had a limit order would have got triggered. But when you look at it at real time, it went right to that liquidity and turn right around. So
Yes, now in the case with, I think it was EJ, can you look at EJ, please?
sure.
On the, if you go to the, I think, okay, off the higher time frame, I think it was the weekly or no. So if you go to the daily, one of these time frames was showing me, no, I think it was a 2-week. Anyways, on EJ, you see that it actually is not making higher highs, which was what kind of like my signal on the daily.
It's probably the 4 hour that wasn't making a
4
higher high.
hour, yes. So it wasn't making higher highs, and also like it dipped down, took care of that liquidity. I mean, that imbalance, yes.
So
And
to
that
me, this dip down broke structure. This was your chalk.
exactly.
Yeah.
I agree. So, and because it didn't make higher highs, I got in on the wick right after your crosshair on the, no, that there's an order block right below
This one.
that one.
Perfect. That's yeah, you're to me, this means a lot because we had talked about this higher high, higher high, higher high, equal high. You're exactly right. Enter that trade. Because you're already anticipating the change of direction.
Yes.
Yeah, I agree.
Yep. One other thing I would just like to leave the people with is, there's a time element to all this trading, and the market kind of changes characteristics, for lack of a better term, probably every quarter. So, what I would say is I would be looking for some of these higher frame catbird positions like every 3 months, start of every quarter, definitely every 6 months, but every 3 months, you probably need to look at those 3-month charts, because there's probably going to be a liquidity grab, involved, and that's a good opportunity to get catbird in some of these longer time frame buys or sells.
Yes, I agree. And I think I lied. I think I got into that wick because I entered on the 5th, which was Wednesday. I just checked them up. Yes, I got in on that wick off that. Yes, but it's still catbird. And then on UJ, I also got in that one, and that one also showed lower highs. And I had a little trend line on that one on the 4 hour. Yes, up there.
Oh, you fancy. You fancy.
You fast.
Trying. But I lost my catbird.
You can't get that up, man.
You're forward testing. So now you're seeing it, right? See it, say it, do it. You see it, you say you see it, and all you got to do is apply what you're seeing.
Yes. I'm getting there.
Yeah. And your voice is being heard. So now they're hearing it from you. Then you're going to gain confidence, and then you're going to lead somebody into this because they're hearing your success. And that's pay it forward. Even when people don't know that that's what they're doing, that's exactly what you're doing. You're asking the right questions. You're starting to catch the right moves. And now you're working on the back end. What do I do when the move comes to fruition? What are my options? Don't close the trade completely. That's the part you needed to work on. And now you're going to be doing that. And now you're going to be showing people thousands of dollars of profits, and they're going to wonder how you got there. And they're not going to know unless you tell them. That's your voice. We're helping you strengthen your voice and have confidence in your voice. And then you give it.
Oh, I thank you. But it wouldn't happen without, the group, that's for sure. Todd, Kim, everybody, you. So, Todd, can you go back to EJ, please? Because I think the reason why I picked EJ, I think there was either a 2-week or a 3-week order block. 3-week? Month? Or maybe not, I don't remember. Okay.
There's one.
Yeah, maybe it was.
Now it's an order block for real.
Yeah, no. I'm gonna try to get back into EJ.
Yeah, let it buy up first.
Yes.
EJ was such an ugly trade to me.
Why?
I don't know. To me, UJ was the best looking one.
Well, we already know when you pick one, then everything else is ugly.
No, you gotta remember that I've had this trade. Like, I know y'all don't have privy to the I posted this so long ago that I was able to follow it. You know what I'm saying? Like, you
I
didn't
do
you didn't
remember you talking about it, like
Right, but-
months ago, that, it needs to come back to this, to
right,
that.
but it's been on my radar that long, so it was a no-brainer, and it tapped right in. So once it tapped in and gave me that bearish order block, it was a give me, you know what I'm saying? Whereas this trade, and when I remember, UJ dipped down too, just like this. So, it's probably all the same. Like, to me, this is still a pretty trade, but this leg of the trade sucks. So if you would have gotten up here, all this noise would not have mattered. But if
This
you
is what scared me, because I got out of the trade when it pulled back with that red wick that you see right there by the P. And I wasn't, yes.
yeah, so this is where, in my opinion, where your higher time frame bias has to outweigh any of your short-term fear. And because if you had looked at the EJ 6-month candle, have you looked at the 6-month candle?
I'm not sure.
If you had came into the month understanding that EJ on a 6-month candle had went up 2,000 pips or somewhere close to it, then you already know you're going to get 1,000 pip move down. So
Yes.
I don't care what kind of jitterbug action happens at the top of this candle. It's going to push down. You can't fight 1,000 pips off. You can't fight that. It's going to pull back. You know what I'm saying? So I personally wouldn't have been shaken by the ugliness at the top. Now, the only thing that can screw you is if you're over leveraged. And this is why, and we probably haven't stressed it enough here this week, this is why you have to walk into a position, which means you can't put 5 lots on this position. You gotta build your position as it moves down and breaks structure. So
Well,
maybe
now that I'm looking at this, I can also see like I shouldn't have gotten out because it did break structure to the downside again anyways.
I agree.
I think it was news that showed up on EJ that day.
Well, I'm sure it was. Like
I think it was Thursday.
I think all of the JPY pairs still reacted to the NFP news. Probably most pair reacted to NFP.
I mean that wick candle that I got out of.
Oh yeah, I don't know what that was.
Euro news.
Yeah, maybe it was.
But I'm glad Barbara asked about news, because I did have that similar question.
Yeah. So, if you enter your trade, before the news, like, you're in profit or whatever, then I wouldn't even worry about it.
Okay. All right, thank you.
When you're in the catbird seat, right? And you're calling it the catbird seat, you got to remember what you were willing to lose on that trade. You go on a profit, it looks great, but you have to be considering the original reason, because until it gets off the top of the structure, you still have to be willing to take whatever that original loss was going to be. Then once it starts breaking the lows and starts putting you in profit and has left the top position alone completely, then you can move that stop loss. You can't move it until this structure is broken, right? And you have to be willing to lose the original trade. Yeah. A lot of people, you know, what are my rules? What is my strategy? I'm catching a trade. You put all that effort into catching that trade and then you close it out. Like, no, you can't close it out. Do 2 trades. Do one that you're going to close out and then do one that you're not going to close out. You're going to take that loss. I have to be willing to take the loss and then I'm going to leave it alone. If it's $250, if it's $500, if it's $1,000, I use the 25K challenge for a great example. You can't lose $1,250 in a day. I have to use a lot size that if I'm going to lose on that trade, it has to be less than $1,250 that I'm willing to lose, right? Whatever that lot size is, I like using 0.25. So if I would have caught the trade at the top of structure and put the stop loss a couple of pips above the structure, as long as if that thing gets stopped out, that it doesn't equal $1,250. Now, if it's only going to lose me $250 or $500, hell yeah, I'm rocking with that, right? And I'm going to leave it alone. Let it ride.
Yes, I'm working on that.
And people talk about percentages a lot. Okay, percentage. All right. I don't really use percentage. I just know that I'm not willing to lose $1,000 and anything over $1,000 in one trade. Now I'm ahead of I'm further along in my journey. A lot of people, I just look at it as how much am I willing to lose? Is it 250? Is it 500? Is it 750? Is it 1,000? And we want people using funded accounts, right? So that you have the capital to make these types of decisions. 1 trade, 2 trades, 4 max for beginners, right? 4 max trades, but you got to catch the first one, right? So if you don't catch the first one, none of it works. So you can't even get to the 4 trades because your first trade is going to give you the entry. The second trade is off the confirmation. And then within that second confirmation trade, you can add maybe 2 to 3, and then you end up with 4 trades total. All right, but you got to catch that first one, the catbird
And
seed.
it's all you need. Like you don't
Yeah.
need a lot of different positions. Once the thing starts pushing, man, that profit is going to stack up.
Yep. On a 0.25. Come on now.
Yeah, it's going to stack up. I mean, that 2.25 is $2.50 a pip. We just talked about this thing going 1,500 pips. You had 4 positions. I mean, bruh, basically you have $10 per pip at $1,500 a pip. That's 15K.
15K.
So, it's just, we have to change the way we view things, and we got to change the narrative, hopefully everybody's getting excited about the ability to see what we see, as far as the longer range. That was, if y'all look at that video that I dropped in this Zoom chat, he's going to talk about the professionals, the difference between us as retail traders and the people who do this as professionals. You don't hear them saying, hey, I'm a swing trader. Hey, I'm a scalper. I'm a position trader. They're traders, and they trade whatever the market gives them, right? So if the market is in consolidation, they scalp it. If it's trending, they swing it. Sometimes they position trade. We are whatever type of trader we need to be to take money from the market. And to me, I mean, that was an eye-opening moment, because the skill set is based on the candle formation in the time frame that we're trading. There's ICT makes his money on the 15-minute chart, and less. He takes his setup, he looks at his liquidity, everything is based off that 15-minute chart. That's his higher time frame chart. I use very high time frames, but at the end of the day, it's all the same thing. We're doing all this. All of us are doing the same thing. We want to get in after we see a liquidity grab, whether you know that or not. You're getting in after the liquidity grab, and you're holding your trade until it breaks either the level of liquidity or it creates equal lows, relative equal lows, or relative equal highs. That's it. You make your money and you wait for your next trade. He also said most people overtrade. As a professional, he takes, max 3 trades every week. So if we're sitting on the call and you've clicked that button more than 3 times, you're probably the problem. Now, I'm not saying that there's never times that you do that, but you're probably the problem. And here's another thing, because I know that have the argument with Todd, I'm a scalper. I get it, but the market is not always a scalper's market. So are you only scalping in a scalper's market? Because if you're trading the same things that I'm trading, probably not scalping stuff, So, just we all have we're all responsible for our own personal growth. And if we're not growing, we look at the man or the woman in the mirror, because we're the ones at the end of the day that we have to hold ourselves accountable for whatever growth that we're doing. I look at trading stuff on a daily basis. And I know everybody else has lives and stuff, but you guys have to carve out some time to where you can dedicate to your growth.
Excuse me.
I'm sorry, go ahead.
I'm not sure where you said you posted that link for the video. It's not in this Zoom chat. I don't see it. Or did you put it in the Discord?
No, this is Zoom chat. I'll drop it again.
Thank you.
The Zoom chat. Or maybe I'll direct message. Everyone. I need to stop this recording. Man, it's like 2.5 hours. You guys have any other questions?